Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Wednesday afternoon, we have Ryan McCormack, factor and core equity strategist at Invesco, to discuss Nasdaq-100 weekly performance relative to the S&P 500 and the CPI data that rose 4.2% from a year earlier, a month-to-month gain of 0.8%. Ryan, the largest monthly gain since 1981, and you didn't really need that data to show that inflation is certainly affecting prices at the pump, and supermarket receipts were certainly climbing. So I think that can contribute to some of the downside action we've seen week to week in the Qs.
Yeah, I think for sure, right? And you look at last week, you have QQQ and QQQM down nearly 1.4%. I mean, you look at that compared to the S&P 500 down 27 basis points, S&P 500 value up 62 basis points. And as you alluded to, inflation concerns continue to drive the markets. And, you know, we've talked about this year, and even going back to last fall, we've seen this sort of push and pull dynamic when it comes to growth versus value, where you get a data point that maybe shows an uneven economic recovery, and you see growth come back in favor. And I think you look at some of the trading that we saw late last week. It was a perfect example of that. We saw a really disappointing non-farm payrolls report where 266,000 jobs were reported versus expectations for 1 million. You look at March's revised 770,000 number, and that was revised down from 916,000. So, that's a perfect example where it speaks to the uneven pace of the recovery that's consistently being referenced by the Fed and Chairman Jay Powell. Workplaces are opening very quickly, but we're seeing a bit of a struggle to find the labor. I think there may be a number of reasons for that. Maybe it's just a too fast opening from a lot of these jobs, and workers are not ready to return. Beyond that, you have very favorable unemployment benefits that are pretty much extended through September, and recent stimulus checks, along with maybe some potential fear or lingering fear of COVID. So, all these are kind of headwinds to folks returning to the office, and you see late last week, Nasdaq-100 and QQQ trading higher on the back of that news. Now, fast forward to this week, the inflation fears rear their ugly head again this week, and particularly in trading today. QQQ underperforming after the CPI report, as you'd said. The headline showed a 0.8% month-over-month gain, and the core showed a 0.9% month-over-month gain. Of course, the core excludes food and energy, but more than half of the month-over-month increase was driven by sectors that are still kind of playing catch-up post-pandemic, or very much in tune with this reopen trade. Air travel, food away from home, lodging away from home, essentially hotels and motels. And rental cars, as well as demand for used vehicles. An interesting data point there, used vehicle sales, really driven by the global chip shortage, have forced consumers to look to the used auto markets, and prices there climbed by 10% in April. Beyond that, you see lodging prices increasing by 7.6% in April. That was higher than the previous increase of 3.8%. So, you're seeing not only the effects of labor shortages, of the global chip shortage, and really just kind of this reopen trade and people looking to travel and sectors and areas that were still recovering from the pressure that they were under in COVID, driving these CPI numbers. And just to kind of wrap up there, Jill, year over year, the headline jumped by 4.2%, 3% increase in the core year over year. So you are seeing those basing effects, but you're looking at these targeted kind of reopened sectors that are also pushing inflation higher. From here, I think we have the PPI reading tomorrow. That's going to be largely dissected, as well as really any future indication or inflation reading. And then additionally, we have the retail sales figures for April being reported later this week. So I think we have a lot on the docket to discuss next week.
We definitely do. And to wrap up here, let's take a look at sector performance and what is actually doing well in this backdrop.
Yeah, so driven by energy and materials leading the way for the S&P 500. Financials also contributing across all three of those sectors. QQQ and the Nasdaq 100 does not have exposure. Energy was helped by rising oil prices, of course, after the cyber attack on the Colonial Pipeline, forced it to shut down. They're hoping to be back online later this week, but at this point, time will tell.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.